Hey everyone, this is Josh here with Invest with Meg. Good afternoon. So, some major changes to my broker's portfolio today. You probably already saw my post. I exited my hood calls, and you may be wondering why if you're so bullish. Well, I'm going to convert a lot of that capital to shares. That's the first part of it because I want to hold hood like 5 to 10 years. This isn't really something that I want to be a very short term play. Those calls were going to expire. I mean, I had plenty of time on them in January of next year, but I'm looking beyond that. I think this is $100+ billion market cap company one day, and I just want to have the shares. I'm just going to sit on them and let them marinate for a few years and see where we are. This isn't a trade anymore. It's a, buy and hold for me. This is an investment at this point. But yeah, it was nice gains. It was almost 90K, which, for a little less than a month of holding those, that's pretty good. The other thing I wanted to talk about and just give you a quick update on is for TSSI. I had done an article about a month ago on this, and I've been waiting. Bought a few shares. I had some in my IRA, but seeing the SMCI move, which is really a adjacent company, they do similar stuff. They test the racks um, and produce those for the NVIDIA chips. TSSI is just a very small version of SMCI, where SMCI is billions in market cap. TSSI is only $350 million in market cap. There's only 24 million shares outstanding, so they're a really tiny company right now. But they are Dell's main, I guess, supplier vendor for testing AI infrastructure and getting AI infrastructure in place. So really, I started looking at this more seriously. Like it had been on my watch list for a while, but started looking more seriously at it when Stargate agenda, or I guess program, was announced, and I started to see the money that was going to be spent on that. And then it kind of caught my eye too that we can talk about this in a little bit. I have like 15 minutes, so I'll try to get it all in quickly. I saw that they are in Texas is where they're based out of, and Stargate is happening in Texas. So, from a logistical standpoint, it's going to make a lot of sense probably to utilize TSSI. So, if they're going to spend $100 billion per year um, building out the AI infrastructure in Texas for Stargate, this is a $350 million company. I assume maybe they can get 1% of that. Which seems reasonable. That would be $1 billion a year, which is 3x their market cap. So seems cheap to me right now. But we can talk about that real quick. Just to show you what I did, here's the chart and kind of what it's doing today. This buying was not me. I did make a huge once it broke 15, I took an entry. I bought 27,000 shares. And then I opened up $20 calls expiring next week, covered calls. I don't expect it to hit $20 next week, but I would not be hurt if it did and I got called away and made $130,000. And if I do, and if that does happen, I'll just re-enter with shares again at whatever price it's at, because I think based on the market cap and the total addressable market and where AI is going and the spin that we're seeing capex um, steal for these mega cap companies, yeah, I think their support of Dell, who they have a contract with, that gives them very stable revenue, could expand to other companies where they're helping out. Could be Nvidia directly. Could help somebody like Tesla out. Not Tesla per se, but XAI and anybody else that's going to be part of that infrastructure deal that's coming to Texas starting this year for Stargate. All right, and just to show you that I'm not making this up. Okay, well, it's just going to be frozen, so never mind. We'll go to the article. So yeah, I bought those, and I bought hood shares. I bought 1,000, and I'll keep adding. This TSSI, we'll see how quickly this plays out. Um, I don't know if it'll be a super long hold. I was kind of thinking it would play out over the next 6 months, 6 to 12 months, but we'll see. And I'll continue to just DCA into Hood because I do think it could just chop here for a while. If it keeps going up, I mean, I'll keep DCAing in, but if it goes down, I'll be happy to because I'll just be getting a lower cost basis. All right, let me share this with you. I wasn't even sharing my screen. How silly. All right. So this is my thesis that I have on my Substack for why I'm getting into this. This is just a little background up top about TSSI. When I wrote this, it was trading, I think it's like $8, or at least when I first did my first intro to this on my Substack, it was trading at $8. When I wrote this longer deep dive, it was already up 100%. I wish I had done a lot more in my IRA when this was at $8 than I did. I wish I'd bought my 27,000 shares at $8. But yeah, everybody knows SMCI. Here's the chart of what that looks like versus what TSSI is right now. You know, this is very reminiscent to me of the build up here as AI started to become a thing in early 2023, and then it really started to take off for SMCI once they had their partnership with NVIDIA and several other companies. This became the infrastructure play that everybody was into, and it made this beautiful Christmas tree pattern. Um, this was a few weeks ago, so I think it's back up over $46 a day, which is part of the reason TSSI is running today. I think it's in sympathy with SMCI, but we'll see. I think whatever happens with SMCI in a couple weeks, I think the 25th is the SEC filing date. If they get the audit done and get an approval stamp from their auditor and the SEC, I think that will still be good for TSSI because I think SMCI will run and it'll pull it with it. I think if they don't get the audit done and there's a bigger issue with SMCI, I think that's also good for TSSI because it means they could potentially be getting more business that used to be SMCI's business. All right. So in this article, I just compared the two. I used SMCI as a proxy of what TSSI could be, looking at 2025. First section here is just some financial breakdowns. Looking here at the revenue growth rate in percentages over time. TSSI is actually growing at a faster pace than SMCI up through the last 12 months, which this was in December. We don't have the numbers for Q1 obviously yet for TSSI, and we did just get the SMCI numbers. I haven't updated that yet, but they're unaudited, so take those with a grain of salt. I'm not going to read all this. If you want to see the article, you can read it. Free cash flow is the next one I compare. They don't have the wild swings that you see with SMCI, which I like. They're a little bit more stable in free cash flow, but you can see that they're positive and have been, which is a good thing when you're investing in a company long term. The upside swing isn't as great. So I guess the ceiling isn't as high for TSSI as it is for SMCI, but the floor is higher if you're thinking about like fantasy football terms. So yeah, it looks like they're better at just managing cash flow than SMCI is. SMCI takes out big loans to build out these infrastructure programs for their vendors, and then the vendors pay them back and they cover the loans, and then whatever's left over is their profit. TSSI does the same thing. They just do it on a smaller scale, and it looks like they're more efficient at it. If you look at dilution, that's the other thing here. TSSI has almost no stock-based compensation dilution going against it, whereas SMCI, this is really hard to keep them separated, is going the opposite direction, which is pretty clear here. Returns on equity, nice, steady, slow growth for TSSI. As you can see, SMCI is way larger, but this is because they're putting more in, or have to this point been putting more into building out their infrastructure support than TSSI has. They're taking out much larger loans and they're supporting larger projects. But I think TSSI can continue to get market share, especially with Stargate being in their backyard in Texas. that they can maybe start to get this exponential growth that we were seeing with SMCI last year. And then I did the cash flow breakdown for TSSI last quarter. They have been positive net income the last couple of quarters, and then they guided that they would be positive for the next 2 quarters, and then they would see the similar revenue because they have a contract with Dell, and they're more or less working at max capacity to support Dell. So this 70 million in revenues is probably what we'll see for Q4 and in Q1 of this year. But then they said starting in the middle half to back half of this year, they'll start to ramp up again for their growth. So I don't think there's going to be a whole lot of growth the first part of this year, which is what they guided. But we can pretty much assume that they're going to have an EPS of around point 0.1 um, and a net income of around 3 million. Like I said, there's only 24 million shares outstanding, so this is a tiny market cap company. But it's good to see, their operating expenses are not crazy. The cost of revenue is very high, which goes back to me talking about, they take out large amounts of money to build out these programs for the companies that use them as a vendor, and then they get paid reimbursed, and it covers the fees, and they get some money on top of that. So the margin isn't great because the revenue is so high, the cost of it. But as you'll see in a minute, they're in the process of expanding operations to 3x their capacity for what they can support, and I think that they're maxed out right now. So I think if they 3x their production for testing these water cool racks and getting stuff set up inside these data centers, that they'll be able to fill that 3x capacity that they're going to produce, which would put them at what 210 million in revenue. And if you assume everything else stays the same, I think their costs are pretty fixed, so it'll be a relatively the similar percentage here. You can see net revenue up to 9 million, which would put EPS at like 0.4. Even with the EPS at 0.1 right now per quarter, which is what they expect to see going forward the next 2 quarters. If you gave them an annual EPS of 0.4 at $15, that means that they're really only trading at like a mid-30s PE ratio, which for an AI infrastructure company isn't crazy. SMCI was trading at like over 100 PE at one point. And as they were able to 3x, revenues because they're going to 3x their capacity, then you're looking at, an EPS of closer to 1.6, and at $15, that means their PE ratio is like sub 10 right now on a forward basis, assuming that they can get that market, that part of the market, during the Stargate build out. All right. And again, they're less than $500 billion market cap. So you're talking about billions of potential addressable market to help support these AI programs. I just don't see that it's crazy that they could get, a sizable piece of this. This is just a backstory about what happened with SMCI and Ernst & Young and the audit issues. Not really relevant for why I bought TSSI. It's just something to think about. The narrative for TSI is better. TSSI. It's a American-based company based out of Texas. We know the Trump administration wants to use American companies, wants to use people like Dell, and Dell is their main partner, so they get to ride their coattails on any money or any support that the government's going to give them to build out these massive AI facilities in Texas. So yeah, the narrative is just better. SMCI, even if they get this audit put behind them, this will be the second time that they've been put on notice by the SEC for that. So I just think the optics for TSSI are going to be better going forward than they were or are for SMCI because you don't have that financial SEC scrutiny over their products. Hey, Matt, you might not need to trust me, but congrats because did you get it at like 14, 13? It was 13 this morning before it popped. But I think this is something that's going to play out over the course of this year. Once we get Stargate numbers and hype, and once they break ground in Texas for this, I think if they get a nice 1350, damn, Yeah, it's a lot better than my entry. So, yeah, I think it can easily double from there. Let's just put it that way. 26 would be like a, I don't know, 600 million market cap. They're going to spend 100 billion dollars a year on Stargate, so they don't need to get much of that um, market share for that product to really ramp up their income numbers and revenue numbers. So I did a projection here based on like a P of 28. If we just assume that we'll see revenue start to come in from Stargate and other programs, other partnerships in Q3 of Q4, they already said that they're going to start to ramp growth again in the second half of this year. Um, this is a 50% growth rate. Granted, to put that in perspective, their revenue last quarter was up 700%. So 50% for an AI infrastructure growth rate, small cap, is probably not, I mean, it might even be conservative. I don't think it's that high. This is what it would look out in through 25 into 26. Um, you can see it's more or less hovering right now in 2025 near, or has been gotten up near 20. I think it's at like 15 and 16 right now. I don't have a chart up in front of me. But I'm projecting out to like 30 end of this year. If you keep that growth rate going and you project the revenue numbers based on Q3 of last quarter. So that's kind of my estimate for where we'll be. Looking at the roadmap, I already talked about it, but they're located in Texas, which is where Stargate is going to be built out. They validate direct liquid cool racks. They're tripling their capacity to do this right now, and they're supposed to be operational in Q1 of this year. Well, they said early 2025, so I'm going to guess that they're probably either operational or getting very close to being operational in their new facility. Right. And that was from the last earning call that they mentioned that. And then in January of 2025, they secured, which was just this past month, 20 million credit facility. They're going to use this obviously to help build out their infrastructure. This is just kind of how they operate. This is the same way SMCI operates. They'll take out this loan, they'll build stuff out, they'll increase their capacity, and then once their supplier, Dell or whoever, um, uses them to max out their capacity, they'll get the money back on the back end. They'll pay off the $20 million, and whatever they have left over will be their income, their revenue. Right. And then market recognition. Just a few weeks ago, they actually rang the bell at the closing ceremony for the NASDAQ. They've been referenced in several articles recently about down the road S&P 500 or NQ 100 inclusion. I know they have a long ways to go for this, but if they can follow the same growth path that SMCI did, and I think there's room in this space for two people, then they can definitely get on that level at some point. That's probably years down the road, though. So yeah, I think there's a real possibility of this reaching $30 in the next year. You can go back and look at this, but the comps are there. What they've guided for going into this year, I think already, like I said, the EPS is in the mid 30s right now, just based on what they guided at the end of last quarter. And I think if they can triple their production like they said they're going to in the first part of this year, then that EPS would be like sub 10 right now, based on the revenue that they would generate from that. And AI hype kind of died off recently, but I think it'll come back. You know, got Nvidia earnings coming up at the end of March, and then I think they also SMCI already reported, and their numbers were fine. They're up a huge amount in the last couple of weeks, but I do think that TSSI is supposed to report also at the end of March. So keep a lookout for that. I don't expect any fireworks. They already said on the last earnings call that they were expecting to report the exact same numbers as they did in Q3. And that's just because their relationship with Dell is already set. And Dell is like 99% of their income. So you already know how much they're going to get from Dell. It's a contract. So they'll be 0.1 EPS again, and probably around 70 million in revenue. which is good. Which is good. They're only 350 million market cap, so any positive EPS quarter over quarter, it just looks good. It just means there's room, to the upside if they can get another client outside of Dell. All right, that's just my quick spiel. So yeah, I bought 27,000 shares of this at 15 when it broke today. I did open a cover calls against it for next week at 20. Like I said, if I get called away, I would be very surprised if that happened. But if it did, I'm not going to be butthurt about it. And if not, then I'll probably just keep selling like way out of the money calls and collecting a premium on this, because I do think later on this year, I mean, maybe not this quarter, but starting the end of next quarter, you'll see some news about their new facility running. And then if they start to talk about capacity being filled for that, then you can pretty much guess what their revenue is going to be. And I think they could get up to $200 million a quarter if their capacity is maxed out for their new facility. And right, they're only at 70 million right now. So it's a 3x in revenue. And I think share price will probably follow that. It may not do exactly 3x, but 2x from here is certainly feasible. All right, well, that's it. I'm going to pick my kid up from school, but thanks for hopping on. See ya.